Imagine this. The retirement saving of millions of South Koreans, teachers, nurses, workers, are now quietly tied to the future of Bitcoin. Yes, you heard that right. South Korea's National Pension Service, the NPS, one of the largest pension funds in the world, has started increasing its exposure to Bitcoin-related assets. This is not just a small investment experiment. We are talking about a fund that manages over 800 billion, making it the third largest pension fund globally. When a fund of this size even shifts a tiny percentage into Bitcoin, it sends ripples across the global markets. So why is this such a big deal? First, pensions are known to be very ultra-conservative. They don't chase hype. They don't gamble. They protect retirements. So when the NPS starts increasing its Bitcoin exposure, it signals something powerful. Bitcoin is moving from speculation to legitimacy. Let's break this down. First, institutional signal. If South Korea's pension service is comfortable holding Bitcoin-related assets, other pensions, sovereign wealth funds, and retirement systems around the world will take notice. Nobody wants to be left behind in the next global asset boom. Secondly, liquidity and demand. Bitcoin has a capped supply of 21 million coins. Every time a large institution buys, they reduce available supply. With a fund as big as NPS, even a fraction of a percent can mean billions of dollars flowing into Bitcoin, creating an upward pressure on price. Thirdly, future adoption. Pensions investing in Bitcoin set the stage for government acceptance. If your national pension holds Bitcoin, how likely is the government to ban or heavily restrict it? Exactly, that's what you're thinking. It's highly unlikely. This could open doors for clearer regulations and even Bitcoin ETFs adoption in Asia. Now, think about the long game. Bitcoin's price is driven not just by hype cycles, but the network adoption and long-term holders, meaning that it is working on network effects. When pensions step in, they don't sell next week, they hold for years and even decades. And when you talk about network effects, it's just the same way as Uber. The more people come into Uber and more drivers come in, the valuable it gets. That means less Bitcoin circulating, more scarcity, and foundation for a long-term price growth. So what does this mean for the future of Bitcoin's price? It means institutional adoption is accelerating. It means Bitcoin is becoming a core part of the global finance. And it means the next bull run may not just be powered by retail investors on exchanges, but by the deep pockets of trillion-dollar funds securing Bitcoin for generations. South Korea's pension move is more than just an investment. It's a signal that Bitcoin is no longer just digital gold or BitGold. It's becoming a pillar of the global financial system. And when institutions this massive start stacking Bitcoins, or rather stacking sats, the question isn't if the price will rise, it's how high. So, subscribe for more insights on Bitcoin's future and get the latest news on this channel.